Welcome everyone to the Legal Hour with Marty Tate. We'll start in just a moment. All right, welcome everyone to Legal Hour with Marty Tate. We're joined by one of the leading security lawyers in the space, Mr. Marty Tate. I am Brent Bragg from CrowdEngine. Marty's from Carmen, Lenoff, and Israelson. Marty, how's life treating you?
Life's good.
You enjoyed the snow in the middle of May?
Yeah, we were joking that every time I'm in here, it's snowy weather, which was fine in December. And middle of May, it's not so great, but
yeah. For those of you who do not live in Utah, it's been snowing the last 2 days, and so it's been quite the weather anomaly. But anyhow, let's go back to the wonderful world of crowdfunding. There's a little bit of news on some of the forums and things of a Reg A Plus raise that got a little of attention because of their marketing practices. I think they used the gentleman from Seinfeld. He also was on a couple of Xerox commercials, and he was promoting their brand. Are you familiar with this story?
Yeah, so the company is YayYo, and they basically put together an ad that was running on CNBC and some other networks. It had the guy that played Jay Peterman in Seinfeld, who was a pretty funny actor. That's obviously not the problem. The problem was it came across as pretty promissory. They compared themselves to other companies.
Like Uber?
Like Uber. They used words such as, hypergrowth and like I said, compared themselves to already successful companies. So again, the advertisement in and of itself, advertising online, it's advertising in a TV ad is completely permissible. It was just they went a little far. I know I listen to a lot of podcasts and radio stations, and I hear ads for other Reg A Pluses all the time. So that's definitely not that wasn't the problem. It was just they went a little far. That nothing happened to them as far as I know. I mean, this was just a few days ago. But
do we know if their legal pulled it, or did the FINRA call them? And
I don't know.
It's speculation at this point.
Yeah, I'm sure. But it was interesting. There's a really good article on Crowdfund Insider by JD that talks about. He went through their offering circular and kind of broke it down and kind of compared what they were saying versus maybe the reality of it. So anyway, it was interesting. There's always something.
So is your point that the circular didn't necessarily match the rosy picture their advertising had, that there's a potential disconnect there?
Yeah, well, and it was interesting. I know nothing about this company other than kind of what I've read. So it was interesting because it really kind of broke down. They made some comparisons of how revolutionary they were, and JD kind of goes through and says, well, they're not that revolutionary. In fact, there's something already on your iPhone or your Apple Maps that can do kind of the same thing, and their financial situation might not be as great as they're claiming. So it's interesting in advising clients on Reg A Plus offerings. It's such on any sort of securities offering, the ability to promote your offering and to adequately sort of advertise. We deal with a lot of marketing folks that are used to marketing their products, and when you're marketing a product, it's okay to say, hey, these are the lightest, the best, the fastest, the greatest. But when you're talking about a security, you have to be very careful with that type of language.
So the rules change from being a marketing person as opposed to a security person is raising capital, where a marketing or salesperson may be a little aggressive in their claims, and that may be very effective in driving sales and revenues. You don't have that freedom when raising capital to give the same potential corporate spin or sales pitch, because there's now a level of legal standard that has to be met, that you cannot mislead. You have to show, I guess, air your dirty laundry along with your promises.
Yeah, and one of the things that you try to stick to is basically you want to stay on script, which is what's in your offering circular. I get questions about, well, can we answer these questions from investors? Can we have a, if we get calls and can we talk about new products? Can we talk about different things? And my advice is stick to what's in the offering circular. And you don't want to, the situation you want to avoid is, again, you don't want to be promissory, you don't want to be too promotional or flowery in your language, or too forward-looking. If there's, I was talking to a client the other day, and they were talking about, they said, well, we've got this potential new contract that we're going to sign that will be huge. Can we talk about that? I told them no, because that's the type of thing that, investors are going to, that you would want in your offering circular. What I would suggest in that situation is filing what's called a Form 1U, which is just an update. It's similar to an 8K in the reporting company world. And once that contract is announced, but I think it's hard to, we want to talk about, hey, by the way, so we've got some big things coming, or things are looking great. Again, you're selling a security, and it's like the what we hear in cop movies, anything you say can and will be used against you if you, in a court of law. If you say, hey, we're the next Uber, or we're the next Google, or even not even saying we're the next, but
we are like.
We are like.
We are similar to.
Yeah, we are.
You can compare us to.
There was, I was reviewing some material for a client the other day, and they said, we are like, and I think there's you see a lot of these apps that are sort of in that Airbnb, Uber space, and people are trying to describe what they are like, for a certain industry, and they say we are like the Airbnb or the Uber for the, XYZ industry, which I think that makes sense. You're trying to describe what you are. If somebody says, hey, what does this product do? You say, well, we're like this, which is perfectly fine in marketing the product, but in sales material, that implies that your financial success will be akin to those companies. And that, like I said, that could be used against you.
So the takeaway from a securities perspective, what may be very effective to sell your product and your company, you may want to have a second opinion or a thought and avoid comparing yourself and or making claims that don't fairly represent the reality. I shouldn't say reality. If you give them too much roses without the appropriate amount of thorns, it could, I guess, be misleading. Is that the message?
Yeah, I think that you just sort of stick to the facts. And if it's not, we'll kind of go in the Reg A world again. If it's not in the offering circular, I would be, and it's material, I just wouldn't include it in marketing materials. Like I said, it's okay to talk about, hey, these are some of the things we're doing in our business, and if an investor calls, but if it's material and it's something that all investors should know, then it should be in the offering circular. And qualify everything you say with, please refer to, the offering circular, or if it's a Reg D raise, refer to the PPM, or if it's a CF raise, refer to the Form C.
So we have a question from one of our guests, and they say, I'd be interested to knowing if they run a 506C and a Reg A plus using the money from the 506C, when could they touch the money if it's fully disclosed to help fund the Reg A plus campaign? So they want to run a Reg D 506C to help fund the Reg A plus. They're okay with disclosing that to the investors, but when do they get to touch the money?
So with the 506C, there's it doesn't have the same sort of, unless you set it up that way, it doesn't have the sort of mini-max parameters to it. So if somebody's doing a 506C offering and they disclose, they're doing a Reg D offering, they disclose, hey, we're trying to raise $500,000 or whatever they think they need to put together and market there, and that might be a little high. I don't know. Maybe they're trying to raise $100,000 or $200,000.
or $1 million or $2 million.
Yeah, and all or part of the proceeds will be used to to cover costs associated with a Reg A plus offering. As long as they disclose that, they might want to have some sort of minimum, like we need to raise at least $50,000 or something before we close out the offering. Typically with a Reg D, you'll see we're raising up to, but you will have some sort of minimum amount that we need that the issuer will prescribe, because in order to fulfill their business plan. That's something that I've actually seen on the Reg A side. I'm sorry, not Reg A. On the Reg CF side, we're seeing people with these, and we've talked about this, setting their minimums. Initially, people were coming out and they're saying, "Hey, we need to raise a minimum of $250,000, and we're going to do up to a max of 500 or something, or we'll raise it." But what you're seeing, and the regulations allow it, is they allow any sort of minimum. So you're saying, "Hey, we need to raise at least," they're setting a minimum of $5,000 or something. And I would, just advise that if you're an investor, that presents a tremendous risk, because that's basically saying, "Hey, we can pull the money out at any time, or as long as we hit that 5,000." But most likely that's not going to be sufficient to move the needle or help them, open up the next store or expand their business or buy inventory or whatever. That would probably just help them go cover, utility bills that they haven't paid for a few months. So I think I don't even know where we started on this trail.
So we're talking about having funds available from one raise and used to another raise. Is it possible that you could even use a percentage of, hey, we're going to take 25% of the Reg D raise and apply it for marketing purposes on the Reg A plus? Could you disclose a percentage and take a percentage? Or
sure.
Is it?
Yeah, there's, the nice thing about Reg D is that a lot of the rules prescribed to, I think one of the things that happens is Reg CF has so many sort of rules and restrictions, parameters, and that's one of the general complaints about it. But we get those in our mind, and then we sort of apply them to other securities offerings. With Reg D, you basically, like I said, as long as it's disclosed, you could say, "Hey, we're going to do X percentage." You really can do whatever you want. We're going to take this amount. We're going to. I think just the key there is you have to set some sort of realistic, mark that you're going to achieve. Because if you say, "Hey, we're going to do a percentage," and you only raise $10,000, it's just not going to move the needle.
So let's talk about the concept of crowdfunding for a minute. There seems to be confusion in the marketplace of what constitutes crowdfunding. So the question is, I plan to post all our Regulation D 506C offering projects on our website, not crowdfunding sites. It will have 8 to 10 projects on our site. All projects are on our company projects, no projects from outside sponsors. Our partners will do the same marketing offline to drive the traffic to our site. Is this considered crowdfunding? What are the potential legal issues we should take into consideration? So I think the confusion is, I don't have a crowdfunding portal, I'm just doing this. Or, people don't know when it is crowdfunding and when it's not crowdfunding. Is raising capital online the same as crowdfunding, or is crowdfunding a particular legal term that has to be solved for with legal structure? Yeah. Because a lot of people say, well, I'm not raising capital, or I'm not crowdfunding, I'm just doing this. And in my mind, it's a lot wider range. I don't really like the term crowdfunding because it means nothing, but it means something to everyone. So let's talk about this for a moment and kind of explore the concept.
Yeah, so let's answer the question first. If you are putting offerings on, if you're selling securities on a website, so you're generally, that would be considered crowdfunding, and we've kind of referenced in previous meetings that and discussions that really crowdfunding is just using the internet to sell securities, but it's actually more than that. It's crowdfunding. It could be using radio, it could be using TV, as we talked about. What you kind of have to go back to are you soliciting? It's really, are you soliciting
or marketing
a securities offering? And if so,
yes or no?
Yeah, yes or no. And if so, and are you sort of generally soliciting that? Is the general public able to see that securities offering? If not, if you are soliciting it just from friends and family and you're talking to people, then that would not be considered crowdfunding, because there's not, quote unquote, the crowd.
But if a stranger has access to see that deal online, by default, you are crowdfunding.
And again, I think we talk about crowdfunding. Is this really what crowdfunding is? Like I said, it's in a legal sense, anytime you sell securities, anybody, it has to be pursuant to a registration statement. It has to be registered with the SEC. So that's the baseline rule. However, there are a myriad of exemptions from registration. Rule 482 is sort of the private placement exemption, which says any sale of securities that is not public does not need to be registered. Well, that creates a lot of ambiguity and confusion, so the SEC created Regulation D, which was a safe harbor from registration, which basically said, so long as you meet these requirements, you can sell a security. And that was the typical private placement exemption most people fell under. It was, Rule 504, 505, and 506. Now, the Jobs Act introduced what's called 506C, which said, so long as you're selling only to accredited investors, the premise of Rule 506 and 482 was you couldn't generally solicit. You couldn't market your deal. It was a private offering. You were talking to people you knew that were in your network of people. The Jobs Act introduced a change to Reg D and created 506C, which said as long as you're selling to accredited investors only, you can advertise and you can market that deal. It also introduced Title III Reg CF, which said, or if you're using one of these licensed platforms, you can raise up to $1 million from anybody, accredited and non-accredited investors. So those are sort of the crowdfunding exemptions. And then Reg A Plus was basically a registered offering. So it's not an exemption from registration, it's a registered offering. So anytime you are selling securities to anybody outside of your network, whether it's through the internet, whether it's through, like I said, radio, television, billboards, skywriting, whatever it might be, that's crowdfunding. And that needs to fall within one of the exemptions that we've talked about.
Perfect. So by getting a license to CrowdEngine, that doesn't mean you're crowdfunding. By not getting a license to CrowdEngine, it doesn't mean you're either crowdfunding or no crowdfunding, right? It is by whether you use a website or not. If there's public access to the deal, you should consider yourself crowdfunding.
Yes, exactly. So yeah, if they have a license to CrowdEngine, but it's
you still do 506B deals on CrowdEngine, sure, which would constitute not crowdfunding, because you're doing a 506B, which is not marketing. It's still friends and family, still closed. So the use of technology doesn't dictate crowdfunding. It's the public access to the deal that dictates crowdfunding, not crowdfunding.
Yeah.
And that's where you have to be careful and make sure it's done appropriately and correctly.
Yeah. Let me just talk. You mentioned 506B. Basically, what that is that's the old Reg D, which basically said as long as it's not a public solicitation or general solicitation, then you're exempt. And how people use technology to do 506B offerings is they have a platform, they have a landing page. but visitors to that site cannot see the offering unless they have registered with the site and that the person conducting the offering has established a pre-existing and substantial relationship with that investor. So that means they log in, they go through a process, they register, and so forth.
Yeah, the technology is streamlining and automating the investment process. The technology is not marketing the deal, right? Mm-hmm. And so we see a lot of technology automation with the investment process and post-investment management of the investors, but it should not be done with the 506B to market that particular project. And that's where you would get in trouble. Let's talk a little bit about credit cards and the use of credit cards in the space. There seems to be a lot of confusion. Prime Trust came out it might have been 4, 6, 8 weeks ago saying, guess what, world? We now have the ability to take on credit cards for Reg CF deals. In the legislation of Reg CF, it was written into law that credit cards can be used to purchase securities, and there's between those two statements, whether it's Reg A Plus or Reg CF, there's a lot of confusion. Everyone wants to allow their investors to use credit cards, but there seems to be no one doing it. Do you have any legal insight on that background, Marty?
Yeah, so the use of credit cards, like you said, is permitted. It's not, or I guess I should say it's not prohibited by the regulations, but that doesn't mean it's necessarily a good idea. I think it obviously facilitates transfer. I think that, and I know that some platforms are wanting to and trying to use that. But the issue is twofold. One is just the obvious, which credit cards presents the risk of a chargeback. So it's just a practical application. Somebody goes and they buy securities, especially on, it's on a raise that has like a minimum amount. So say you're trying to raise $200,000, and what if 50,000 of that or whatever is on credit cards, and you have to allow, there's this period of time for chargebacks, and some people are addressing that by creating a reserve or an overallotment.
Currently with Prime Trust, it's a 6-month reserve.
Yeah.
With a very high amount. So yeah. It's actually keep going, sorry.
Yeah, so in that situation, yeah, they would set up, say you're trying to raise $200,000, they might set aside $50,000 or $100,000 or something. They would make you oversubscribe it so that you could cover any potential chargebacks. So that's one way to deal with it, but that's a risk. The other is just that was discussed a lot in academia prior to the rules coming out. It's basically, when you do that, you're buying a security, you're buying it on margin. So you're using debt to buy a security, which is generally prohibited in the regulated trading world. So that was something that was a concern. It's not, but it didn't result in a.
So let me take a different angle on this. Yeah. So FINRA and the SEC allow it to happen. The issuers want it to happen. CrowdEngine doesn't care whether it happens. The people who very much care are the banks and the payment processors. Yep. They are scared to death. There is extreme resistance to enabling this. And Prime Trust was successful at getting one bank to agree to it with significant hurdles to overcome. They won't give a merchant account to a single issuer. You have to be a portal. So while it's technically possible, it's not yet practical for people to consider credit cards as a viable means for payment on their platform or securities. Can it be done for Reg CF portals if you jump through all the hoops? The answer is yes. Is it worth jumping all the hoops at this point in time? That's for you to decide. But there's significant hoops. And again, holding your money in an account for 6 months that you're liable for, you paying for all the chargebacks, I mean, it's expensive money after a while. The value of conversions quickly dissipates when you say, wow, me accepting credit cards just cost me a lot of money. Yep. There has to be a significant conversion increase to compensate for that disparity of cost versus everything else. So when you look at the conversions via ACH, they're typically not that significantly less, right? We don't see people dropping off because they're using ACH. And so while again, I don't think it's a final status, but for the time being and for the next foreseeable future of several months at least, I don't see the banks warming up to the idea anytime soon going, hey, let's open the floodgates and allow everyone to use their credit cards to pay for Reg CF securities. Now, if the market demands something differently based on the traction of the Reg CF portals and things, I do see a swelling tidal wave of Reg CF portals hitting the market. It only takes a couple banks to make a lot of money before the other banks will jump in, because no bank wants to be left out of making money.
Sure.
But again, now we're guessing on the market conditions. Is that 3 months away, 6 months away, 3 years away? So again, it's legal today. Finding a bank to do it is another story. The one offering that did do it, they did it using a different merchant account. So they didn't apply to the bank saying, hey, we're applying for a merchant account for this securities offering. They had an existing merchant account. They threw all those investments under that account, and that's how they process them, and then that was kind of a one and done thing. So even that model is not advisable or sustainable for any reputable business or company. Let's go to the next question. Are the aggregator sites that show the offerings from different portals restricted in any way to show and say something? Like they're kind of referencing next gen crowdfunding. You know, it's a aggregated site. They're showing all the Reg CF deals. What's their legal responsibility of what they could say or can't say or show or not show?
So groups like NextGen, they're aggregating. I don't think they're advertising themselves as a portal, right? I mean, they're just basically saying here's a list of offerings. Here's what they're doing. As long as they're not acting as like I said, a crowdfunding portal, as long as they're not promoting, they're not marketing, then the restrictions are limited in that situation. I'm not sure. Do you know much about this group, Brent?
Yeah, Richard Schwartz.
Is it Richard's group? That's what I thought. So I mean, are they more just trying to gather like information? I mean, they're there just trying to.
I think they have several purposes. Yes, Rich is often the data guy and looking for that metadata of the industry. But I do also think that they're aggregating all the deals and trying to be the hub source for many deals. I'm not exactly, I don't have any details as far as their success or their exact purpose other than just being a viable source. And I think they're collecting the data by being that source.
Yeah. So it looks like they've got, so they're basically posting the Reg CF permitted tombstone ads. And then as you click on it, it'll take you to it'll give you information on that, and then if you want to invest, then it'll take you to the platform. So they're allowed to do this. I'm not sure, if they're getting paid to promote these. It's like just a marketing fee. Obviously, they're allowed to, as long as they're not being compensated as a broker dealer.
So here's an interesting question. You mentioned that you have a couple deals on NextGen site. Does NextGen have the legal right to post deals that are publicly posted on the internet?
Yeah, I think so.
I'd assume so because you're posting it, but again, I don't know what the copyright or infringement is. When I post something on my website, who has license to promote it?
I'll have to reach out to. I'm just, it's funny. I'm interested in, if they're being paid for this, if there's like a
service.
Yeah, a service that they're saying, we'll post these deals up there. Again, it's public information. All this information not only is available on the platforms, it's also available through the SEC because they're filing their Form C. So this is all public information that's here. It's not unlike other aggregating websites that aggregate deals and public offerings and so forth. So I think it's a really cool service. In fact, it's funny. I didn't know that NextGen because I wasn't even familiar that NextGen was doing this. So I thought I read their reports and obviously know Richard really well.
So let's go back to a previous conversation as far as crowdfunding. There's a couple of clarifying questions I'm getting. And this, I think, has more to do with rewards donation. If my website allows individuals to create a fundraising campaign, is that crowdfunding? This goes back to the confusion of what the hell crowdfunding is.
Yeah. If they're
so,
okay.
let me take a stab at this. Okay. There's a difference between securities crowdfunding and the implications securities have in the laws and guidelines and non-securities. So in the realm of donations and reward-based and cause-based fundraising, there is no clarification needed for crowdfunding. There's no laws or guidelines to directly oversee that. The SEC and FINRA do not get involved in that as a general rule. When you raise capital for a securities offering, like we're talking about Reg A+, Reg D, 506C, 506B, Reg CF, then you have the compliance standards of the SEC and FINRA that have to be met, and that's what we're talking about. And so this is one of the reasons why I don't like the word crowdfunding, because it means something different to everyone, and there's no clear definition of what it is. Another clarification point is if we ask the public to contact us to learn more about it, the raise or the security, is that crowdfunding? So you say, hey, we're raising capital, contact us, and the answer is yes.
Yeah.
Because you're saying, we have a multifamily deal, contact us.
Yeah.
We have a business, contact us. It's not how much information you give that dictates it. It's you're saying you're raising securities and give me a call.
Yeah, so if you send out an email, so if you are, if you're a business and you send out an email to your 10,000 customers or subscribers and say, hey, we're raising capital, let us know if you'd be interested. Yeah, you're crowdfunding right there. And again, it's the word, right? You're selling securities. You need a securities lawyer. You need to make sure that that offering is either registered or it's compliant or it falls under a state or federal exemption.
Here's a generic question, but I get it asked all the time, and I don't know how we want to take it, but what are the legal requirements for that blasted word crowdfunding website? Okay, Brent, I fell in love with crowdfunding. I'm on board. I'm smelling the roses. I'm jumping in the water. I'm ready. What do I have to do to be legal? And so I think there's a lot of confusion people have of making their quote-unquote website legal and then their raise is legal. And is there a difference there?
Yeah, there are. So, and again, if they want to be a crowdfunding platform and they want to sell other people's deals, they want to help other people raise capital, then they need to think about how are they going to do that. Are they going to target accredited investors only? And if so, then they need to make sure that the website is compliant, that you're selling those securities in accordance with 506C or 506B if you go that route, or Reg A or whatever it is. But no license necessarily is required in connection with having that type of a platform. But if you are going to try to help other people raise capital under Reg CF, non-accredited investors up to $1 million, then you need to be licensed. You need to be licensed with the SEC or FINRA. And that's what would help, quote unquote, make that website legal to sell for others. If you're selling for securities for yourself, if you are a business and you have a website and you say, hey, we want to raise money for our company on our website, I know CrowdEngine has a really cool sort of product and way that you can do that, then you would need to make sure that offering, again, complies with applicable securities laws. It either needs to be registered or it needs to fall under an exemption. I know that we have clients that have a web presence and want to raise money for their company, and in doing so they would create this sort of separate bolt-on platform to their website where their customers, people could go and invest in their company through a exempt offering or a registered offering that is compliant.
Yeah, I mean, this is why CrowdEngine exists, because to allow entities the ability to raise capital compliantly online with all the legal ramifications embedded in that experience. So not only do it automate the investor experience or showcase the deal or manage investors post-raise, but you have that compliant infrastructure to hold and address all the legal implications there are with doing securities online. Can an investor be or operate an employee? Can an investor be an employee in a deal?
So I guess the question is, can an employee invest in a deal?
Yes. Could an employee or operator, let's put an operator of a business or an employee, could they invest in a deal?
Yeah. Yeah, there's no, as long as that deal is being, is compliant with securities laws. So if, say, for example, if you had a company was doing a 506c offering, could an employee invest? Yes, as long as they are an accredited investor. If the company's doing a 506c, a Reg CF offering, then yes, they could invest as long as they stay within the limitations.
Yeah, there is a couple of nuances where if they post a comment, that comment must be flagged that they have a relationship with the deal, and so obviously that feature functionality comes in CrowdEngine. So yes, you can participate in the offering, or employees and people can invest, but if there is a relationship there to that entity, it must be disclosed to other investors. Because you can't say, this is the best investment I've ever seen in my whole life, and this solves world peace, and not clarify that you're not connected. So you'd have to have it visible. FINRA's going to look for, is this person flagged as a person that is connected to this deal?
Yeah.
So you can't have, hey, a business owner can't mandate all his employees to post great comments on their project without flagging every single one as an employee comment. Who checks the compliance of the requirements under Reg A Plus?
So a Reg A Plus offering, I guess there's a few different levels of sort of compliance check. Reg A Plus offerings need to be qualified by the SEC and FINRA. So there is that qualification and check in place. In addition, a lot of the Reg A Plus offerings use broker-dealers. I think that's a good idea because they can help perform that diligence not only on the issuer but also perform the checks on investors. If there's not a broker-dealer in place, then on a Reg A Plus, the issuer themselves would have to do any background checks or not that it's required, but AML, anti-money laundering checks on significant investors. That would fall to them. But I guess there's level. It depends on if you're qualifying the offering, qualifying the investor. That kind of depends.
What constitutes AML? Because AML, I think, means certain things to certain people, and I myself would like the clear definition of for Reg A Plus. When I need to do an AML check, what am I asking or requiring? So
it's really, again, it's anti-money laundering, and the key there is, and I've advised clients that if it's below a certain threshold, nobody's going to money launder $500. But if you have a significant investor, it's really just understanding who that investor is, where the money's coming from, and creating that. There's this, a series of checks. I can offline provide a list, but there's a series of checks that need to be performed just that you understand. The key is, where is that money coming from? Understanding like the banks, the origins, and so forth. But the key there is, again, if it's smaller amounts, then it's not as crucial.
What's a typical threshold that you suggest to your clients?
$5,000.
$5,000 plus. So any investment over $5,000, you hold them to a higher standard than anything less than that.
Yeah.
Perfect. So let's talk a little bit about testing the waters. I think there's a level of confusion of who's allowed to test the waters, why is this good, why is this bad, and what are the implications of testing the waters, and what do I have to do to properly test the waters so I don't get in trouble?
Okay, so testing the waters is a kind of a carryover concept from prior securities rules and public offerings, where it comes up. And the reason it gets talked about is in connection with regulation. A+ offerings, they allow the issuer to test the waters, which is to go out and get indications of interest. That means an issuer can go out and say, hey, if we did this, we're contemplating doing a Reg A+ offering, if we did this, would you be interested in participating? The benefit of that is it allows the issuer to do just that, test the waters, dip their toe in and get feedback and decide whether it's going to be worth the time and effort to go out and put together the offering circular, get it qualified with the SEC, and so forth. So that's definitely a benefit of that.
Can I pause you right there?
Yes.
What would be the drawback? Because what I see is a lot of business owners, they surround themselves with wonderful people that support them, love them. They get a little bit of traction, and they're testing the waters, constitutes, going around to everyone they know saying, hey, I'm thinking about doing this. And everyone that they know obviously likes them. They're obviously typically very charismatic people, being a business owner, et cetera, and they have a very biased feedback loop, right? Because they don't really want to spend the money to go out to talk to 1,000 strangers or spend the money to Google going, hey, I'm going to bring 10,000 strangers in and see if they want to invest. Yeah. They stay in their peer group or their social network, and all they hear is roses and unicorns, right? Yeah. Rainbows and unicorns going, oh, this is great, yeah, I'd love to invest. Then they go live, and then the moment of reality hits of all their friends and family like, oh, I'd love to invest, I don't have money though. And then everyone else, there's crickets, and then they're like, oh no.
Yeah, so I think if you're going to, and that is, but that speaks more to the effectiveness of the Test the Waters campaign. I mean, if they're limiting that to sending out, to talking to friends and family and people around them, then yeah, that's not an effective campaign. I know that a number of the platforms that specialize in Reg A, there's obviously a reach there. There's the ability to go out and sort of expand beyond your current peer group. So I think that that could be a disadvantage if your testing the waters campaign is not effective. Testing the waters also includes any sort of pre-marketing efforts done prior to the qualification of your offering. So if you have a Reg A+, even if you've gone to the extent of you've hired an attorney, you're putting together the offering circular, you've submitted to the SEC, you're working through comments, but during that time, you're going out and you're marketing your deal, you're saying, hey, we've got this Reg A+ offering, this REIT, this whatever it might be that we're going to be selling. Any sort of marketing material, any selling efforts prior to qualification also is considered testing the waters. So that's something you need, and where that becomes significant is all of your testing the waters material needs to be filed with the SEC as part of your offering circular. It needs to be reviewed by them. FINRA will also look at your testing the water material to make sure that you're not violating your rules there. The
latest trend is to not test the waters.
Yes.
Because if you're going to test the waters, this is more of a marketing conversation than it is a legal conversation. Legally, it's absolutely very legal, and you could do it. But what often happens is, okay, I'm going to spend 10 grand, 20 grand, 100 grand, 200 grand on testing the waters. So great, I brought X amount of people to my site. They all said they're interested in, and none of them were able to invest. So now we go live, and now I have to spend more money to bring that subset of people back to say, okay, now you get to invest. So you actually have to pay them twice to come back to you, and it's not a very effective means. So most people say, I'll save that money and just apply it to the marketing campaign when we go live, and when they come to the site, they invest right then, and I don't have to sell them twice. On a deal. And so again, it's not whether it's legal or not legal, it's not whether it's ideal. The question is ideal for you based on your circumstances? Are you going to do the raise anyways, or and you're just curious of what what people are going to say, or you're really going to do a test the waters and get a far reach into your target demographic that doesn't know you on a first name basis and figure out what your true market demand is for your security?
Yeah, and one thing to note, we talked about that in the context of a Reg A Plus offering. Reg CF does not allow you to, quote unquote, test the waters. You are allowed to, do kind of what Brent said. If you want to talk amongst your sort of peer group and say, hey, we're thinking about raising money, that's probably okay. But if you, send out an email to your, customer base, or have something up in your, if you're a brew pub and you said, hey, we're going to do this Reg CF offering, let us know if you'd be interested, or sign a list or something like that. That's not permitted under Reg CF. Basically, you cannot communicate anything about the offering prior to the filing of your Form C with the SEC.
Awesome. So let's go to a real quick second. We use portals and we use the word platforms. Crowdfunding portal, crowdfunding platform. Is there a legal difference between a platform and a portal? And if so, what is it?
So, yeah, I do the same thing to try to distinguish. So a platform, a portal, we'll start with a portal. A funding portal would be considered, in my mind, a licensed intermediary, somebody that's been approved with the SEC and FINRA to conduct Reg CF offerings. So anytime I talk about a funding portal, I'm talking about a Reg CF. A Reg CF, yep. A website that sells Reg CF deals. A platform, it could be any website that sells any other types of securities. A platform could also be, I suppose, a portal if they're licensed. But a platform would sell or offer 506C deals, 506B deals, Reg A deals. That's kind of the distinguishing factor there.
And a platform could turn into a portal.
Yes.
And a portal could turn into a platform.
Sure. Yes.
And so at the end of the day, if you can make a big distinguishing deal about it, good luck, because I see them more interchangeably than significantly different. But there is language around the funding portal that if you are going to go Reg CF, you need to be aware in your application processes that you represent yourself appropriately, but that's why you're hiring a lawyer like Marty to guide you through that. But as far as the street, there is really no difference between a portal and a platform. To lawyers and a few people in FINRA, there appears to be.
Yes. Yeah, sorry.
But it was a great answer. I just want to make sure that, because you could start off and just having a Reg CF portal and then migrate to Reg A Plus and Reg D, or start with a Reg D portal and migrate, or Reg D platform and migrate to a Reg CF portal, and offer both of them at the same time.
Correct.
So it's a very loose term, even though I think when originally legislation was drafted, they didn't realize the words they were using and the implications of those words, and so they still have to be respected. But I think it's been. Can a Reg A Plus securities be liquidated in the secondary market?
Regulation A Plus.
Regulation A Plus. Securities be liquidated in Reg A.
Yeah, so
let's define a secondary market.
So there would have to be a secondary market established, but Reg A Plus securities are not restricted, meaning once they're purchased, they could be immediately resold in a secondary market. Secondary market basically means the primary market would be you're buying it from the issuer. Secondary market is you're reselling it to somebody else.
Is NASDAQ, New York Stock Exchange, OTC, are those secondary markets?
Yes.
Yes.
Those are exchanges, yes.
Yeah, the marketplace is exchanges, right? And so if another group wanted to create another marketplace or a quote-unquote secondary market, they could also, through their filings with the SEC and everything else, create that and provide liquidity for Reg A Plus. nearly immediately upon closing of their offering.
Yeah, so what you're seeing with some, most notable being like YayYo Motors, they were listed on the OTC, which is a secondary market, and so their shares in YayYo Motors were able to be traded shortly after, and there was that secondary market that existed. So that is a benefit of Reg A+. Again, it takes time. There's time and expense associated with that. And then once you're on a secondary market, doesn't necessarily mean a market will exist for that stock. You have to have market makers, people that are going out and selling that and promoting it. So it's never as easy as it sounds.
And how soon could a 506C or B be liquidated?
So that you're buying restricted shares there, and you have to resell that in accordance with Rule 144, which requires a holding period of 12 months.
12 months. And then Reg CF is also the 12-month holding period.
Yeah.
So Reg A Plus allows immediate liquidity. The other two common used crowdfunding offering types, Reg D and Reg CF, require a 12-month holding period before liquidity. Yeah. Are there any legal parameters on the duration of a raise, how long it could be live? So how long could we have a raise, a Reg A Plus raise, be live? How long could we have a Reg D raise be live?
So no, there isn't a time limit. That kind of goes back to a business decision, though. I know for some of so for example, for a Reg A Plus offering, you have to put your offering circular, you can put you have to put a termination date, but that can be extended. So typically what you'll see is it will end on this date, but maybe extended.
Yeah, this is critical for funds.
Yeah.
Right? For real estate funds, REITs, other types of funds where there's not a specific close date. You'll have a ceiling of how much you could raise. You could raise up to $50 million in a Reg A Plus, but that could take 2 years, 3 years, 5 years, 10 years. You don't know how long it's going to take you to raise that capital, typically when you're launching the raise. And so again, as Marty mentioned, you will do your best guess, and then you'll have an extension beyond that.
Yeah. But like I said, there's marketing and optics to sort of having that short duration, especially you see this in like Reg CF deals. It creates emergency. If something's just open forever, people they don't feel that urgency and they don't invest. The other thing is that the longer you're on there on a platform, something gets stale and they're like, oh man, these guys still haven't raised any money. So it's advice. Typically you'll try to go a shorter term. I mean, anywhere from 30 days to 90 days is what you typically see.
Yeah, I think you want activity.
Yeah.
Right. More so than the openness is if you're finding that you're not getting activity either by lack of marketing or lack of demand for what you're raising capital for, you kind of have bigger problems than the expiration date.
Yep.
Because the crowd will be guided rightly or wrongly by the actions of everyone else. So the beautiful thing about the crowd is you can create demand for your product because everyone else is doing it. Everyone else is throwing money at this company. I don't want to be left out. I'm going to throw money at it too. Well, no one else is throwing money at this company, so what do they know that I don't, right? I'm not going to second guess the wisdom of my decision if I don't see anyone else jumping in the water.
Yep. So
you're going to want to have enough focus on your deal to sustain that perception of market demand, which Marty was alluding to. Not so much a legal question. Yeah, it could always be open-ended, but it's going to be difficult to have that demand sustained if you have forever to jump in the water.
Yeah, and Reg CF deals with you disclose your termination date. So there's not a timetable on when it. You do have to set a termination date, but that theoretically could be 2 years out. But as Brent said, wouldn't be a wise choice. The other thing is it takes there's effort and energy and time spent in connection with these offerings. So trying to keep something open for indefinitely is if there's something other than like a fund would not be advisable.
This concludes the webinar for this month. Thank you, Marty, for coming over and talking to me.
Yeah.
If you have any questions, feel free to email or call Marty or Brent directly, and we'll be happy to help you out.
Yeah, thanks, Brent. I'll make a plug. There's in 2 weeks in Washington, D.C., Fund It. The last conference was in Las Vegas. I thought it was great. I'll be there. I know a lot of industry professionals will be there, so if you can make it, that would be great.
Awesome. We look forward to seeing everyone. Have a great day.
Thanks.